Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. It's been a while since we've done a weekend ticker review video, so figure let's spend some time with the market being nice. There's a lot of charts with nice setup, whether it's coming up to the money line or right at the money line or just starting to bounce from the money line. Let's go through some charts, make sure we're well prepared. And our chat room had quite a few requests today or this weekend for ticker reviews. And I planned on getting the video out yesterday so that you guys will have more time to watch it, but unfortunately the schedule did not work out. So let's get right into it then. All right, first one. Yeah, let's start with this one. TKAT. TKAT is gonna remain on top watch going into next week. One of my personal top watches is going to be, I think there's going to be a lot more room to move on this one. However, we are rejecting from the GP. This whole move has been 202% so far. And we caught probably about 100% roughly about it. Because essentially it is a high risk trade. Even with the money line bounce, with the daily divergence. This was a beautiful play, but it's still a high risk play, especially with all these lower wicks forming. So what I personally ended up doing was this kind of move up and gap up and run. We sold near into that run and then waited for the bleed into the day. So if we were to look at the day, it would gap up, run, and then bleed rest of the day. Bought towards near the end of the day, do the same thing, gap up and run, and then sell off towards the bleed kind of thing. And same thing on the third day, and then we didn't play the fourth day, which was Friday, which ended up being a huge gap up from the close. It ended up being a 20% gap up and then straight sell from there. So we have now seen two touches in the GP, and we are rejecting from the GP. And what is this one? So essentially over the next fib, so we were using this GP that's rejecting from was the most recent move down. The next GP up is up here in the key zone, but essentially we are rejecting from that 0.382 of that Fibonacci, which is just under the GP. All right, so anticipation from here, bear volume is still relatively low, half of the bull volume on Thursday. I would anticipate a little bit more bleed. Friday was just an inside bar. Let's see if potentially Monday, tomorrow, we might see another inside bar. What we want to see tomorrow is decreasing bear volume comparing to Friday. That would be healthy consolidation. Right now, we are still holding that 0.382 of this whole move up. Ideally, I want to see a 0.5 kind of revisit of this previous resistance around 930 right here. Rejection, another rejection, which would line up with around that 0.5. And I have my alert set just above it, around 950. Keeping a very close eye on TKAT as mentioned. All right, let's get into the requested tickers. We're gonna try to do relatively simple to the point for each of the tickers, just because there's quite a bit that I wanted to get through. We're not going to do anything crazy like before where it's like, 100 tickers kind of thing. But we are going to try to get through as many as we can. But I don't want to make like an hour and a half kind of video. All right, first one, TFII. So TFI International. This has been a long-term channel. Let's see if there's any key zones. And as you guys know, I like to take my time on drawing out the key zones just because the more accurate you get on these, they will become more helpful in the end later down the road. So that is definitely a key zone here. We see rejection, we see another rejection at the top of the zone, another rejection top of the zone, support bottom of zone, support bottom of zone, support bottom of zone, and top of zone as well. So this is definitely a key zone. And then I'm not seeing too much over here. This is a gap up, so there is still a gap left behind. So right here is definitely 77.11 is definitely a notable price. There's been rejection below, and then rejection just above. Another rejection here too. So it was in a channel before. Aside from this key zone, it seems to be just gapping up and running. It's one of those charts, as we're talking about it on our Friday's monthly coaching video. It's one of those charts that you can just either play with momentum. So right now is not a good time to buy. You want to wait for a break of 115.78, then you can play into the momentum, or wait for a gap fill at 105.33. That would be your entry. So ideally what we want to see from here is coming down before revisiting the resistance, and then higher low before breaking out. So then that will be the momentum play. Right. Main resistance is the way it stands. It's gonna be 113.72, 113. So it's about 114, and the highest close would be right about there. So that's the main resistance zone right now. We're gonna want to see a break over that in order for a momentum play to work out, or you just buy at around 105. Remember, divide this up into probably around 2 to 3 entry kind of play. Once this gets to here, we could potentially see coming back to revisit this top of the trend line from the long-term channel. Let's see if it lines up with anything on the fib wise. 0.5 makes sense right there, or 0.382, my apologies. So 0.382, 0.5 also lines up with the top of the channel trend line, so we could come down here. Ideally, this is what I want to see. Gap fill, perfect, line up 105.50. Okay, let's mark an alert for that. 105, let's get it to 60 some. That's good enough. I want it just above. Okay, and next one is TRVL. So travel. I was asked a question of why we're playing, or why for me specifically I'm playing Air Canada versus a travel ETF. Now that's simply because I don't have too much exposure to the Canadian ETFs, I would say. This is Canadian, right? Yeah, this is Canadian. And to my understanding, Canadian ETFs are very much lagging behind US ETFs. So when I look at any sector specific that I want to play, I try to, especially for long-term investing wise, I try to look for the tickers that I have more trust in, that I understand a little bit more, versus, you know, if I knew about this travel ETF, TRVL ETF, probably I would have invested into this one more so than Air Canada. But even right now, when I look at it, you know, this chart is still okay for investing. So I'm just trying to find a key zone right now. This will make sense. Wick just below, which is fine. And then there's definitely something here. Let's see if this works. Yep, that works. Technically we can go lower, but somewhere around there. That makes sense. There's a support here too. Resistance here, so that makes sense to me. Maybe a little bit higher. Either one. So we just got over the key zone on travel. I like the daily trend change, straight from lower low to higher high, daily bull divergence. Volume, not too convincing. Obviously there's another zone there, and then that looks about it. Looks like a relatively easy to chart kind of chart. Okay, that's much better. Rejection, support, support, rejection. Yeah, so that's a much better price, 21.25. Regardless, we did get over it. Right, is there any patterns that we're seeing here? Nope. Aside from a double bottom, triple bottom, depending on whether if you're looking at the wick or the real body, I would say around, it's going to be somewhat classified as a triple bottom. Aside from that, you know, there is previously maybe like a let's see if it goes lower. No, probably around here. Yeah, previous channel or even wedge. Let's try the wedge. I don't really like the channel. This seemed to work a little bit better. Something like that. So there was a descending wedge before, and we have now broken over it, broken over the wedge, broken over the key zone. Chart looked great. I would anticipate a daily higher low to come sometime soon. Judging by this, let's take a look to see where we could potentially reject from first. Okay, GP doesn't really line up with anything. Yeah, GP doesn't really line up with anything. There is a wick there, but I don't really see. From here, anticipation would be 0.5. So we already broke the 0.5. Potentially coming up here, back test before next leg move up. So that's what I would anticipate in the sense, you know, let's say if we do get up there, 0.382, 0.5. If we were to reject from here, 0.382 would make perfect sense. So let's see where we reject from. If we reject from Friday's high, 0.382 would line up with the upper trend line of the previous wedge. All right. Let's see. We drew the wedge okay. So this is a short-term trend line that gapped up and kept on running. And what is this? There we go. All right, so that's TRVL. Momentum looks good. Wait for a higher low on the daily. Risk to reward from here doesn't really make sense. You're looking at 2% up with potential of 4% downward, but it is good for long-term investing, in personal opinion. All right, next one is AME. I believe next few we're gonna go over quite a few penny stocks, ventures. Okay, so there is a base forming on here. AME actually looks pretty good. Increasing volume, nice movement. Still rejecting from the key resistance. Very notable resistance right here. You can see 139 support, previous support, support again before breaking down the next day, and then rejection, getting close there. So there is a zone in between. I would probably say somewhere here to here, but that's a little bit too big for my liking. This, yeah, that makes sense. So double rejection and it became support. You know what? Personally, I probably would like it better if it was strong reverse. So something like that to right here. Then you mark, because there's nothing here. Yeah. Then you draw a zone on the bottom. Okay, that makes sense. Somewhere around there. So been stuck in between the two zones. With this lower zone, we can see previous support. Again, support 3, 4, 5, another support. With this upper zone, we can see previous support and rejection, multiple rejections. And now we're starting to make over that with decent volume coming in. Amy is looking actually fairly okay with a wedge or a short-term trend line. Nope. Wrong drawing tool. Short-term trend line that has now broken bull with follow through. So Amy looks pretty good in that sense. Now, depending on what your entry price is, this would be a sell zone from here, at least for now, just because you can see previous resistance. There's a lot of people who bought in from the support back here that are going to be looking to sell because they have been bag holding since what? March 2021, 5 months. And in that sense, when we come up to this upper part of the key zone, I would anticipate some sort of selling pressure, and then from there we'll probably be looking at a daily higher low before a next leg move up. And then next is HODL CSE. Okay, yeah, that's right. For Amy, for HODL. Right, so the money line is right here, and we are trading under it now. Held the support. Could say it's right here. Okay, there we go. That might make sense. So we held the support. It's very, very thinly traded back here. Even now, even nowadays, it's still thinly traded based on all these dojis. Yeah, looking at the candlesticks, this is very thinly traded. 17 cents Canadian. Market cap is 26 million. With the way it looks, there is going to be a zone around this lower part. Support rejection makes sense. The good thing about these penny stocks is they are relatively very easy to determine key zones because they don't move much. When they do move, it's like 1 cent, 2 cents. So the charts make it relatively easy to find the substantial price action areas. See, that one's very easy. You just go to the top, you can see another rejection here, and then multiple rejections with a support back here, another support back here, rejection, support again. So with this, ideally what you want to do is from here you want to see a money line hold. We have seen a bull divergence on the daily before already with follow through into the upper trend line, upper key zone, and then rejection from there. So we want to see this as a higher low now. Yeah, it has. From a short-term standpoint, this 16 cents must hold, because once the 16 cents is lost, you have lost the money line, and you have lost all the support from before, rejection as well, and you will likely be looking at the lower part of the key zone. So depending on what your hold timeline looks like, you could put your loss just below this key zone at low of 0.125. So I probably put it at like 11 cents as a stop. As for profit taking wise, as long as you break even, I don't really see a point in, because usually people who play penny stocks, they hold for a long time. Whereas profit taking wise, you could probably, if I was playing this, I'd probably take a profit on this top of a key zone, wait for a higher low before a re-entry kind of thing. Same with anything else we play. It's pretty given that we've only revisited this zone once. On the second revisit, chances are fairly decent that we are going to see another rejection. So with this, what you want to see now is hold of this money line, come back up here. Ideally, make a higher low at this previous support resistance before breaking out. Okay, next is S. TO. Okay, share it. Choppy chart. Long-term downtrend. What is going on here? This is like a is this like a what are they called, volatility kind of play? Because it seems to just continue to bleed out non-stop. So as the way it stands, there is probably, okay, so a broken bull over the most recent trend line. There's no money line, but we have broken bull. Broken bull over this one. Sort of just went sideways and break bull instead. This is probably the most notable one. Rejection, 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 another rejection. So this is the main trend line that you wanted to see a bull break over. So let's see, actually, let's go back to that. We saw bull break, slight increase, low bear volume, and an increasing bull volume. So this chart looks like it has topped out. And now we're seeing on the monthly, we're seeing increasing bear volume, getting under that monthly 8. So chart does not look very good from a long-term standpoint. If you're holding a bag on this one, probably wait for, let's see, down 48%, weekly 8. I would probably exit on the next lower high. You know, on the monthly chart, it does not look good. So on the monthly chart, it has ran 900%. And now it's really starting to give back with increasing bear volume. Losing that monthly 8, the key that must hold on this kind of chart. Yeah, daily is in a down bearish trend. Weekly has just turned bearish trend with a lower high, or higher low, lower high, and now a lower low. So if you are still in this, the essentially right now is somewhat of a double bottom right now, increasing bear volume. What you want to do is either place the stop just under 36 cents or yeah, place it under 36 cents. Ideally, you want to hold that and see a lower high, and I will still exit at the lower high. With this kind of chart, you know, I can't see it continue to bleed on S Sherritt International RV. Okay. Next is MKD. It's another one of those kind of charts here. It just continues to bleed. Must hold is already lost. Does not look very good. The must hold is 42 cents 10, and that was last month. Wait, that doesn't look right. Oh, 57 cents was the must hold. 42.10 is right now. 57 was must hold. Yes, last week was 55 cents, closing of 58.70. So last month we closed just above the must hold, and this month we already lost it on increasing bear volume. The month hasn't even ended. This is almost double last month's volume. Where is that? Volume. Can I move this up? Okay, anyways. Keep catching myself slouching nowadays. Okay, where is that? Status, no, oh, indicator values. There we go. 36. Okay, so it's not exactly double yet. It's 36 to 21. With another 2 more days left, there's potential for doubling volume. Regardless, it is going to be increasing bear volume. The chart does not look good for long-term hold. We did lose that key support that must hold, and this is now, let's take a look. Yeah, so it is grinding down along this trend line. Potential reversal candle on the weekly last week. Potential dip being bought. So this could be a fake out. Where did oh, there you go. There's no weekly bear divergence. There is no daily bear divergence. So ideally what you want to see right now is let's see, this can probably be drawn a little bit better. What if we go from here? That makes a little bit more sense. That makes even more sense. Actually, let's go back here. There. Rejection, 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 rejection. Another 2 rejections here. So this is the key trend line to hold. So even if we were to move up, you know, there is no daily bull divergence. What could happen is from here, you see, whoop, wrong tool. From here, you see a move up to this previous support resistance, coming back down to make a new low, forming a bull divergence. Then that would be your chance to see a reversal. But if that is not the case, you know, if you see a slow move up to daily and reject, that is definitely a sign to GTFO. Okay, volume wise, see matching bull volume, but unable to push it up. This would be the more likely scenario that I would anticipate on MKD. Next is POSH. Okay, so this one looks a little bit better. There is obviously a daily bull divergence you can see from down here. We are trading over the daily 8. Even with bear volume, unable to push it down. So this is basically just sideways trading right now on the weekly. Potential for bottom out. There is a weekly bull divergence as well on POSH. I am going to mark that. And I took screenshots instead too. Okay. Yeah, POSH looks pretty decent. This was a potential topping out sign 2 weeks ago. Volume climax. And on the next week, the following week, we saw weekly bull divergence forming. Now there is a daily bull divergence. And then monthly, not a whole lot. This market cap is 2.17 billion. So POSH mark, this actually looks okay. Obviously there's no money line because it's a long-term downtrend. This is the key trend line to break. Yep. And let's see if there's a key trend line to hold. Nope. Hey, that works. So long-term wedge, I like the chart. Let's draw this out. To the penny. Let's make sure we get it right on par. That looks good enough to me. And all right, long-term wedge holding the bottom. We've seen 1, 2, multiple touches from that first one, second touch, third multiple touch again, and fourth multiple touch again with 1, 2, 3, 4 rejections. I like the chart. It looks like it's very much ready for reversal. Decent bear volume, unable to reverse it down below the daily 8 POSH. Let's keep it on top watch going into next week. Let's make a note. Send a reminder to ourselves. POSH. Okay, next is WWR. Thank you for bringing that to my attention, POSH. Thank you to BBQQ. WWR, Wastewater Resources. Okay, so not the one I was thinking. There's a wastewater something too. Wastewater Resources, USD. Okay, so there's definitely a zone here. Just a matter of where you want to draw it from and to. I like it here. Rejection, unable to close over, support, and now we just lost. Can we draw it lower? Yes, we can. All right, so let's take a look at this. We will draw it to yeah, so something like that. So very key support resistance at 248. As opposed to that, I still like the key zone over there. And there is another key price right about 329, which we are bouncing from 325. There's a lot of chop in here. Yeah, I don't like it. From the looks of it, there is a potential for a descending wedge. Oh, that's why we're bouncing. Okay, so it's going to be around there. Draw a wick to wick. So a little bit more. This could go on bleeding for a long time without any bounces. All right, so this is a potential wedge with a interim shorter term trend line right here. So if you're looking at bull plays on this ticker, because we broke under the key zone already, if you're looking at bull plays on this ticker, it will be either buy at the lower trend line of the wedge or a buy of breakout. So if you buy it at the lower trend line of the wedge, put a stop right underneath it. The alternative is buy a bull break of this short-term trend line. But with the way it stands, I don't like the chart. Doesn't look strong. It's just going sideways, grinding lower high, lower lows. There is no momentum, no buying pressure at all whatsoever. WWR. Next is ZOM. Been a while since we looked at this one. Have we ever looked at it? It looks like I just quickly drew a couple things that doesn't really make sense to me looking at it nowadays. Yeah, that doesn't make sense. Okay, let's clear up the chart. Redraw this. So there's a very clear lower trend line that we have broken bare under and now coming back, and there is potential of a upper trend line. Oh yeah. Okay, so we were in the descending wedge before, so let's redraw this. We were in a descending wedge. 1 2 2 3 3 touches on the top, 3 touches on the bottom, bear break, no follow through, and then now big bull volume breaking over the upper trend line of the wedge. But we are still seeing a lack of follow through on the bull break as well. Huge upper wicks forming with the reversal coming right away. So the chart actually doesn't look that great for you're gonna need to see further confirmation on this kind of chart. I would say, so this is the hold right now. That doesn't really make sense to me. We could be coming down to here, 25 cents. You want to see a break, a bull break of ideally right here, 90 cents. Anything in between, not really any play. You know, essentially you could be playing bear right now and just wait for a touch on that 35 cents from the 63. I don't think you can play bear on this name. Maybe you can. It's Canadian, so it doesn't look like you can. But bear play would be better than bull play in this case. If you're looking at bull plays, probably you can wait for a revisit of this upper trend line, just a retouch on it, and a stop right below it. And ideally, you want to see a sign of reversal from there, higher low, daily higher low, forming into a reversal, breaking over this 90 cents. That is a must break. Following that, the must break is 106. You want to see a close above $1. Okay, but overall, ZOM does not look that great. Of all the charts, we just went through, I think POSH is probably the best for a reversal play. Even reversal play though, we're gonna, let's see, there's a potential of rejection. Yeah, so high potential of rejection right around that 0.382. We're gonna need to see a follow through. The likelihood of this happening, the likely scenario of this would be that coming back down to around GP where that previous support is before a next leg move up to the GP. Yeah, it makes sense. Okay, so watch for this on POSH. Next, let's go over some popular tickers, or the tickers that I'm watching. We covered BLDP, right? Yeah, we covered BLDP on Thursday. All right, so another sector that I'm personally watching, keeping a very close eye on, is the marijuana sector. So this has been a hell of a ride, roller coaster back in 2017, 2018, well, all the way from the 2016 to 2018, and then again last year from September 2020 to February 2021. And there's potential that this is going to be happening again. So if we look at the weekly or the monthly chart, there is a money line, very clear money line. We can see previously it has been support, became resistance, rejection again here, and it became support. Very clear marking on that support before an actual run starting. And then it came back down after that 2018 run and came to that money line on March 2020. And that was the bottom before forming a lower high, higher low, into a crazy run into previous high. Did not make new all-time highs, but we saw huge rejection from there. But now there is a chance. So if we start seeing running, if we touch this money line and start seeing reversal and start running again, there is a chance that we can see new all-time high. Because you're looking at this candle, a lot of people were selling from bag holding from before. Okay, meaning on this, so all the bag holders are gone. Once we visit this money line again, if we were to see reversal into new all highs, we should be able to see new all-time high on this next move. So keeping a very close eye on CGC money line coming up. Still, this short-term trend line is keeping us down, which is okay. You can see multiple rejections, head and shoulders, and crazy follow through. Ideal entry mark coming up, CGC $13-14 ish. The other one, TLRY as well, long-term wedge. So depending on how you draw this, I would actually draw, let's see, I actually don't like this one as much. I like oh, okay, that works. Be over here, somewhere over here. Right, so depending on how you draw this chart, there's a couple possible scenarios. Oh, this is messy. Let me see. So 1-to-1 extension touched, now forming a double bottom on the money line. Okay, money line, same idea as CGC, multiple supports, multiple rejections. This is a very key trend line. We are seeing a bounce right from that line, a closed under, but immediately bought up again. And then 1-to-1, so 12.52. This one is 12.55. Double bottom, daily bull divergence, TLRY. 55, slight daily bull divergence. Last time we rejected from GP, and with this, we're going to need to see continuation. So there's potential of this being a higher low right now. We're going to need to see a higher high breaking over that $14. Once we break over the 14, I will be looking to add to the position. This chart is looking great for reversal. We're right around that upper trend line of the wedge. Everything's lining up. Daily bull divergence, money line, breaking over the wedge. Gonna need to see follow through immediately next week, Monday, Tuesday. We want to see a close over $14. TLRY, let's make a note of it. Okay. What's another one that I was watching? Roku, that is still on top watch. And go over Pltr as well. So Roku, this is what I'm anticipating. It was working out up until Friday. Friday seemed to ruin the plan a little bit. Wanted to see Friday, Monday, Tuesday potentially coming right down into this GP, lining up with the money line, and that will be a buy. But let's keep an eye on it on Monday, Tuesday. And next one is Pltr. Now, okay, in the case that we don't touch the money line and then it starts reversing already, so this is, let's say this is a daily higher low. If we break and close above this 363.44, I would be anticipating further upside at the very minimal going into 380.44, but potentially more likely looking at 390 on Roku. All right, next one is Pltr. So Pltr, it's a little bit tricky because we did make a new high. Let's see if there's a trend line. I don't think there is a trend line here. No, not yet. All right, so we did make a new high short-term wise, but we wicked from it, and we wicked from just over it, and it closed under these two must close over supports or resistances, 25.75 and 26. Just call it $26. 25.75 to 26 is the must close over two zones, but we are seeing increasing bull volume. The chart looks great for continuation. We did 1, 2, 3, 4, 5, 6 touches, 6 revisits of this upper trend line of the previous channel. Amazing hold. Did close under the daily 8 a couple times, but never lost this upper trend line of the channel. Okay, so that is definitely a guide going forward. We could Monday, if we see an actual rejection, we could be coming back to revisit. That would be a little bit concerning because we will be losing the daily 8, so we don't want to be closing under the daily 8, but that could be the case where you can see coming back down to revisit here before a next leg move up, and that's why I have my alerts set. Actually, let's move this alert up a little bit to somewhere there, so that in case that it does come down, I will be looking at an add at that position. Okay, next is Path. All right, so this is a interesting ticker as well, where in the sense that we are seeing a potential reversal. Some bull volume started coming in. There is a little bit of a little bit of bear volume here. This is inside bar, but next day, what is this pattern? I just looked at it. Anyways, this, if it's at the bottom of a chart, is a reversal pattern, but we're gonna need to see with the way that is forming out right now, we're gonna need to see follow through coming right away on Monday, holding this trend line. The short-term trend line must hold. Let's switch to the long term and key zone accumulation. So this whole zone that we've been stuck in between these two key zones, this whole area is accumulation. That's the way I'm looking at it for Path. Is 1, 2, 3, 4, 5, 6, 7, 8, 9 touches on this lower key zone. Has not lost it ever. Okay, and now there has been, let's see, there's daily bull divergence. But like I said, we're going to need to see follow through, or what could be happening from here is if we see a lack of follow through and reject from here again, the next leg down might be fairly crazy. So you could be looking at something like that, making a new low, because essentially the RSI on the daily is now cooled off. If we're not able to see a follow through breaking over that $66, that is a big red flag. If you're playing this name, probably put a stop. Yeah, easiest stop would be just at the bottom of the key zone, which is $57. So if you were to buy from here, that's $7 risk to reward. Doesn't really make sense. The better way to play this now is wait for a break of 66, and then just wait, enter on the break of 66, because the next leg move up, let's take a look here. The next leg move up, we could reject from GP still too. So GP is at the top of the key zone. Reject. Okay. So then what I would say the likely scenario, support, resistance. Oh, this is going to be hard. We need an immediate blowout through the GP. So ideally what you want to see is from here, back test into new highs kind of thing. This will be most ideal. But if we reject from 66, that is a big red flag. Okay, next is coin. Coin chart is very interesting right now because there is a very notable daily reversal that has already happened a while back. You know, we played this, we played this bounce, we played this bounce, which was very minimal. We played this bounce again, and then we did not play from there after because it's just seemingly stuck in these two key zones. And then from there, the trend actually reversed. So a little bit annoying, but you know, it's a ticker that's annoying, so I'm okay not playing it. But looking at this now, you know, we did lose the GP, not good. So we are rejecting from the 0.382 of the whole move down, big rejection, coming back down, and now there is a short-term lower trend line. That is the guide. If you're in the trade, use this trend line as your guide. You do not want to see a close under. We were very close to close under on Thursday, but Friday we were able to see a buy up. But now essentially we're going to need to make over this key resistance again at 261.05. I can't see this chart just continue to grind up, you know, kind of thing. So what could happen is rejection from here again, back test, and then making another rejection from 0.382. That would make sense. And then the back test, and then coming up here kind of thing. There's nothing to back test there. All right, we'll just call it here. Yeah, so that could be a scenario, ideal scenario, that will actually make sense because this essentially right now is a very rounded bottom. So let's see how this plays out. I can see this just slowly grinding up from here. This is the key trend line to hold, okay? And let's do one more. What are we gonna do? BA. Let's take a look. Okay, so back in that money line, double money line. So this is long term. We will call this one the money line. Back in that zone, gonna need to see a breakover. There's lots of resistances up ahead. So there is potentially the short-term trend line. There's the long-term trend line we got to get over. There's a lower trend line that was from the wedge. There is a upper trend line from the wedge. So this is the most key to break, this upper trend line from the wedge. And then the following second most key to break would be the top of the key zone. With that, if we were to see both broken, we should see decent follow through from there. And if both were broken, let's do 1, 2, 1. Okay, so we can see a rejection from 247. The chart actually looks okay. Nothing too interesting, and this is a low risk buy though. So if you were to buy in from here, you would just place your low at 210, just under 210. If we see follow through on Monday, Tuesday, I would move my stop to just under 215. Chart is anticipation would be a slow. Actually, now that the higher low is found on the daily, yeah, so lower low, lower high, higher low, high potential of reversal from here. Good potential, I wouldn't say high potential. NVIDIA. Right, let's leave it at NVIDIA. NVIDIA, momentum play. Mentioned this on, can't remember, it was Monday or Tuesday's video. Monday. Yeah, Monday. Monday, new all-time high. So I said, even if you were to buy it, you know, at the end of day, at the high of day, the new all-time high, you should see continuation, and we are seeing continuation. Tuesday was an inside bar, Wednesday we saw follow through, and then Thursday was inside bar again. Friday we saw follow through again, and we're now into that GP of 1-2 GP extension. Very rarely we use this, but because the 1-to-1 extension is fairly far away, we're looking at 252. It's eventually, I can see us getting there, but we're gonna need to see what the reaction at this GP is gonna be first. So this does not apply. All right, so that's it for today's video, the weekend review video that we have not done in a long time. Hope you guys enjoy the content. Thank you for watching, thank you for subscribing, and thank you for sharing our channel. I hope to see you guys in the next video. Hope you guys had a wonderful weekend. Be prepared for the next week that's coming. I will see you in the next video.